Do you like to be in and out of the market really quickly? Take your money, take your profit and go. Well, then this is going to be the perfect series for you. I'm going to give you 3 scalping strategies that you can use from today until the day you are fed up or tired of making money. This is going to be done over 3 different videos, so make sure you subscribe to the channel if you haven't already so you don't miss any of those. I'm going to be doing 1 scalping strategy for beginners, 1 scalping strategy for intermediate, and 1 scalping strategy for advanced traders. So wherever you are in your journey, there's going to be something in there for you. And I would also suggest watching all 3 of the videos, as you might learn something along the way. In today's video, I'm going to be going over a strategy which is perfect for beginners. It has a very simple indicator, and it also has extremely easy to follow rules. I will also give you my suggestion for risk management towards the end of the video, so make sure you stick around for that. Now, before I do jump in, I do have to just say this is educational, guys. It is not financial advice. And I would also like to emphasize that you should never risk any money that you are not willing to lose. And I would highly suggest you practice all of these strategies, whichever one you choose, on a demo account first. And even when you do move over to a live account, use a much smaller balance than you were thinking initially, just to get the feel of it. Right, let's just get into it then. The first strategy is going to be a very simple EMA strategy. Now, if you've seen any of my other strategy videos, you guys will know that I love EMAs. And I have done quite a lot of videos that I do use EMAs in those strategies. So if you haven't, make sure you check those out as well. This one, however, is going to be by far the easiest of the EMA strategies that I have done, which makes it perfect for beginner traders. So with that being said, let's jump over to TradingView so I can show you guys exactly how to set up your charts. Okay guys, here we go. TradingView, I'm sure you guys all know TradingView. If you don't, make sure you check out a video I did recently which goes over exactly how to start trading for beginners. I go over TradingView. I'm not going to be talking about that today because you should already know TradingView. Okay, so as you guys can see, blank chart. Now, the only thing I have done differently here is I've changed the colors of my candles. Why do I do that? I like to do that just because I don't like using the stock standard green and red. You know, psychologically, you know, I think the green and red is, you know, you always, when you see red, it, you know, it evokes certain emotions, whatever. I've always just liked, and I think especially for beginners, you know, you don't have to. I'm not forcing you to do that. Do what you want, change it to whatever colors, leave it as default. Doesn't matter. But I am just saying that I have changed mine. I use blue and black. Sometimes I use blue and orange. I've used all sorts of different colors. I like to just, you know, switch it up a little bit. So we are on the 5 minute. Okay, so let's first talk about the indicator. Now, it is only going to be 1 indicator, guys, which is what I love about this, because TradingView, normally to add more indicators, you need to pay a subscription, but you can get 1 indicator, no problem, with a free account. So that is perfect for a beginner who doesn't want to spend money, you know, initially jumping in. They just want to get in and they just want to trade. And especially if you're trading demos as well, you're not making money yet, you're just playing around, you're just getting the feel for it. This is perfect. 1 indicator, and you can do that on the free account. So with that being said, all you got to do is you got to click on the indicators over here. You type in 3 smooth moving average. Okay, so you click on that once. Now I've already got that, so I'm gonna just go make mine visible for you guys. It should pop up. There we go. So once you've put that on your chart, you will see it gives you 3 EMAs, right? So that's the cool thing, is you don't have to put 3 EMAs on your chart. It's 1 indicator that has all 3. So that works really well. Now I've changed mine. Just double click on any of the lines and you'll get the settings that pop up like this. Now your first one, you want it to be 9. Your second, you want it to be 14. And the last one, you want to be 50. Now the style, you guys can change to whatever colors you want. Copy mine. Maybe it'll be easier just to follow along. But once you get the gist of it, change the colors, you know, play around with it, whatever you want, your favorite colors, whatever you want. It doesn't really matter. The color doesn't change how the indicator works. So you're free to use whatever you want. But maybe just while you're following along, use the same colors as I do. This one over here is the 50. The green is the 14. And then the blue is the 9. Okay. Right, so that's the indicator. I told you, very simple, one indicator. Now let's move on to the simple rules. Rule number one is you only are going to take buys if your price is above the 50. For me, the red line, okay? When I say red, it's 50. And that's why I said maybe the colors do the same as I do. So when you're following along, it makes sense. So when you're above the 50, you're taking a buy. You will not sell above. It doesn't make sense because this dictates your trend. This is now an uptrend. You can see here a downtrend. So when your price is below the 50, you are taking a sell. Simple as that. Oh, and I forgot to say, guys, time frames. Now, I would suggest trading this on the 1 minute, the 5 minute, and the 15. You can go higher, but you're just going to be waiting a lot. And I think as a new trader, impatience can be an issue. So I wouldn't suggest going too high. But I also would be very careful when you trade it on the 1 minute, because if you're getting your setup over here, and then you're essentially going to be taking the setup over to MT5 or MT4 or whatever broker platform you're using, you will then need to very quickly work out what your lot size has to be. For example, if you're risking 1% per trade, you've got to very quickly figure out what your lot size needs to be. So there are ways to do that, and I will talk about that as well, but let's just go over the strategy first. But for that reason, I would suggest your sweet spot to start off with is probably the 5 minute. Work your way to the 1 minute because you can get more setups. But also that doesn't necessarily mean it's a good thing, because sometimes, over trading can also be a problem. So 5 minute, I think, is a good place to start. If you still feel like it's going too fast and you still feel like you can't quite work it out quick enough, go to the 15 minute. But then you've got to be patient for these setups to actually play out, So we now know step number one is you are waiting for, or you're taking buys if price is above the 50, and you're taking sells if the price is below the 50. Simple. The next rule is going to be you take your entry when the blue and green cross, okay? So what did I say? I said the green is your 14 and your blue is the 9. So when your 9 crosses the 50 upwards, you're taking a buy as long as you are above the red. Then vice versa, when your 9 crosses the 50, so let's get, okay, here's an example. I've already done this earlier, so let's just make this nice and clear. So you can see there, we had the 9 cross below the 14. I'm just going to say blue and green for now because it's going to get confusing if I keep saying that. So the blue crosses below and then crosses back above. So this is a buy signal because you can see we are also above the 50. So you would take your buy over here. And now for the risk management, guys, you want to put your stop below the nearest swing. So for a buy, the nearest swing low. So you can see there's a swing low. You could also be a little bit safer and put it on this one, or you could be quite aggressive and put it on the 50 itself, or give yourself a little bit of wiggle room. Because you got to remember, guys, with brokers, there's going to be spread. So you want to, don't put it right on. Give yourself a little bit of breathing room. So if that's where I'm going to put my stop, give myself a little bit of breathing room. And then what you would do is you would basically take it to the nearest swing high. So over here, these swing highs are the same. So I'd be looking left. So I'd be looking at something like this. Let me just mark it up. So you can see this is structurally quite a strong point over here where you have that. That would kind of be where I'd be putting my take profit. And there we go. That hits it. So that was an example over there. Let's go to the previous example. I've got a few examples that I've already done, and then I'll do a few for you as we go. So this one here, you could potentially take it, but the blue didn't actually cross above the green. So that's why I left that one alone. Let's see. Okay, here we have another one. So this one, you can see price is a bit choppy. So as you trade more, you would probably kind of learn to leave these ones alone. But I just put this in here to kind of explain it as well. So you can see here, price went above. So this would be like, okay, I'm not going to be taking the sells. And I wouldn't necessarily take a look for a buy because it's just popped above. So you might have taken a buy here because you do have the cross there and that crossing. It would have been a loss, but it could potentially have been an entry. But I wouldn't take that just because I've been below and it's just popping above. So I would wait a little bit for price to kind of make its decision. We are generally pushing down. You can see the momentum here is more down. So I wouldn't really be buying against that. I would like to see the red kind of moving in an upwards angle to take the buy. Now that's, you can play around with that. So not only do I want to be below the 50 for my sells, I'd also like to see the angle of the 50, kind of in that direction as well. If it's the opposite direction, I'm not going to necessarily take that. So why would I take a buy here when everything is kind of going down, That's why I would not have entered there. Based on the rules, you could potentially have, but then you can see the blue comes back and crosses right over here at the end of this candle. And now this is working. So we are below the 50. The 50 is kind of slightly in my direction. It's still going down and price is below and we have the cross. So I would put my entry over there. My stop would be just above the swing high over here. So you could have it there. You could also be, like I said, a little bit more aggressive and put it just above the 50 itself. But that, you've got to understand, that is playing a little bit more aggressive. And the only benefit to that is maybe you get in and out of your trades a little bit quicker. But you could potentially get stopped out more as well. So then my nearest area would probably be, oops, I didn't mean to move the whole lot, would probably be this over here. So this low over there, that's kind of what I would be looking at. Now that is not even a 1-to-1, so you could look further left to see if there's anything else. So I would say maybe you could go to like this cluster over here, this kind of swing point over there. So don't go all the way to the bottom, just give yourself like a 1 to 1.5 or thereabouts. So I think what I looked at was this double low over there. I think what I was doing was somewhere about there, was like that low over there. So I was looking for like a 1-to-1, which I did hit. Now that one would have been, you could potentially have lost that one as well, but it's okay. You are going to win some, you're going to lose some, as long as you are always moving forward. And with this strategy, generally you are winning more than you're losing. Now this is just by using the risk management that I'm talking about. Your stop is above the swing low and your take profit is the nearest entry, the nearest level as well. So you're just going to look left for both your stop and your take profit, right? So you could have potentially done it there, but it would be quite a small take profit. But that's another one. Then this obviously here is another trade as well. Let's have a look at this one. You can see price, we're above. What is the 50 doing? It's moving upwards. That's perfect for a buy, so we don't want to be selling. We're above and it's moving in an upwards direction, so that's perfect. And then you can see we have the blue coming down and then it's crossing over here. So this is a very strong candle, so you could potentially take that. I would just wait a little bit because number one, there was this gap, so this could just be filling that. But let's say you did take it on that, you took it on the crossover there, you would take your nearest swing, which would be this one right over there, and then where would your nearest, so there isn't anything there, so I would possibly just be looking for like a 1-to-1 over here, which is over there, which we would hit. If you've not really got any structure to your left, just look for a 1-to-1 if you're using this risk management. But remember, I said I was going to talk to you about another risk management, or a way that I would use risk management for this setup in particular. So that's that, guys. There's one more over here, and then we'll go a little bit further back. Actually, there's two more. So you can see here, guys, we're moving down. It's a little bit straight there, but you can see it's starting to curve there. We have a nice strong push down there with the cross. Our stop is just above the recent swing, and we're looking at this. Probably that's too much. We'll just be looking at that. So a 1 to 1.4. Most of the time you're getting around a 1-to-1 with this, okay? And then over here, the same thing. You're just going below the recent swing low is your stop, which is pretty much on the 50 as well. Everything's moving up, so we can buy and we get to that recent swing high. All right, so with that being said, guys, there's a lot of trades here, so I'll go further back so we can actually look at another one. But I want to talk to you about the management that I like to use as well. So this is a perfect one, guys. Now look, So we did dip below. So obviously we're not looking for buys now. Then we pop back above. We are now looking for buys, and you can see the angle of the 50 is now pushing up. So that works with our buying bias. And then we have a cross over there. So you got the cross, you're above, everything's exactly as you want it to be, and you would essentially open your position on the close of that candle as soon as the cross happens over there. And then your swing low, so for this one it is quite a far swing. The swing low is all the way down here, so that is like a 15 pip stop, so that's quite far. So what I would do is I would maybe just go on the 50 over here, but just give myself a little bit more, and then I'm looking left, so it's kind of like this area over there is the recent, and it's about a 1-to-1 is what I said, guys. So there you have it. Now the risk management that I would suggest for this is looking at a consistent number, so something that's always the same. And what I have found, the best win rate and actual P&L over a long period is 1 to 1.5. So you'd be looking at, for every trade, regardless of what's left, you're looking for a 1 to 1.5 right over there. So that would have hit the 1 to 1.5. Let's have a look at some of the other trades. Now, what you got to understand when you do this, you might take a few more losses, but that's okay because the wins are actually giving you more. Let's say, for example, you have 3 trades. 1 is a loss, 2 are wins. You're actually getting 3% minus the 1, that's 2%. Now, if you're doing the same with the other way, it's normally like a 1-to-1, you would be only making 1%. So you can see overall, over a longer period of time, this will actually be beneficial. So let's have a look at some of these others, guys. 1 to 1.5, would this one have played out? Yes, it's actually on a 1 to 1.5 there. Would this one have played out? 1 to 1.5, yes, it would have. Now, some of them probably wouldn't have. This one would have. This one would have. This one would not have. I don't think so. The 1 to 1.5 is there. You see it came very close, and it would eventually have stopped us out. So that one would not have given us the 1 to 1.5. This one possibly would not have either if you were taking your stop up there. If you were looking at more aggressive and you were just going above the 50, you would have got your 1 to 1.5. So it depends on how you were playing that. I would say whatever you do, stick to that. If you look for the nearest swing, unless that swing is really far away. This one, it was quite far away, but it would probably be the safer bet just because it's quite choppy. So you might have lost that one. It might have been 2 losers in a row. Which is okay because we can withstand that with the 1 to 1.5. This one would have been a 1 to 1.5 easily, and that's it, guys. Any other trades that I can see? There was one over here. Let's have a look. Short, so you would have on the cross over there, right over there, and then you would be on the nearest swing, which is just over there. 1 to 1.5 easy. Okay, so another one there. So that's it, guys. It is very simple. Let's just go over that again. You are using the 3 the 3 smooth moving average indicator. You are using a 9, a 14, and a 50. Colors don't matter. And then you are only looking for buys if your price is above the 50, and also the 50 is moving more in an upwards direction. You don't want to be taking a buy if the 50 is actually moving in a downwards. That does happen sometimes, that you're above the 50, but the 50 is actually going down. You don't want to be taking that. So you want to be looking at being above the 50 with the 50 kind of moving in an upwards direction. That's perfect. For a sell, the opposite, you want to be below the 50 and you want to have the 50 kind of moving in a downwards movement as well. So that is the 2 things you need to look for on the 50 and your price. And then your entry is just the crossing of the 9 and the 14. Okay, if you're crossing up above, that's your entry for the buy. If you're crossing down below, that's your entry for the sell. So what else have we got? We've got your risk management. I would suggest looking for a 1 to 1.5. You've got 2 options. You can either go, your stop is always going to be the nearest swing, or you can actually do it on the 50. You choose which one you do, but make sure you back test it. And then your take profit is going to be the nearest, again, your nearest level to the left. Swing low for your sells, swing highs for the buys. So the other way I would suggest is just looking for a 1 to 1.5 all the time. You might take a few more losses, but overall it actually will be profitable. Okay, so that's it, guys. That's the beginner strategy. Remember, I said make sure you go and play around with this on a demo, or even just go back test on something like FX Replay. I use FX Replay a lot, and also just back test it, you know, as much as you can. Get as much data as you can, and you can look at the times you would normally trade. So if you are generally sitting in front of the computer, let's say between 9 in the morning and lunchtime, then only back test those times. There's no point back testing outside of those, because those numbers are not going to mean anything to you because you're not going to be trading. So only back test the times that you will be trading. Okay, so that's it, guys. That's today's video of the series, number 1 of the series. This was the beginner strategy. Very simple, guys. I'm not even going to be doing any slideshows for this one. I didn't do slideshows because it's so simple. It's honestly that easy. So give it a go, guys. Try it out. Let me know how it works for you. Now in the next video, episode 2 of this 3-part series is going to be an intermediate strategy. So make sure you are subscribed and turn that little notification on so you get notified when that does come out. And yeah, you guys can just keep trying this one until the next one comes out. I would suggest beginners keep doing this one until you kind of get a feel for it. Once you start getting really confident, then you can kind of move up. But if this one is working and you're doing well on this one, you could just trade this one for as long as you want. It doesn't matter. You don't have to move up. You can select whichever of the 3 you like, whichever one resonates with you. So yeah, I hope to see you guys in the next video. It'll probably be in like a week's time. I want these to be coming out a week after each other. So within 3 weeks, I'll have all 3 videos out for you guys. So I hope you enjoyed that. And yeah, I will see you guys in the next video. But in the meantime, why don't you guys check out a video that we did recently, which we're talking about hedging, a hedging bot that we have created that ties in with our other EA, and it's really fascinating. And so until then, check that out, have a look, see what you think, and we will see you guys in the next video where we are going into an intermediate strategy. So until then, guys, happy trading, and we'll see you then.